Welcome back to the Malaysia Money Matters show. It's the 30th of September 25.
Good to be here.
All right, let's dive in. Our mission today, as always, is a quick, sharp briefing on the key market shifts, policy moves, and global news that are impacting your finances.
And there's quite a bit happening, especially on the company front with some, let's say, regulatory attention.
Yeah, let's start there. The steel sector seems to be under the microscope. Mayu Global.
That's right. The MACC, the anti-corruption agency, has frozen bank accounts belonging to Sunrise Manor. That's an 80% owned unit of Mayu Global.
Okay. And a director was called in.
Yes, Tang Tiam Hoke. It's apparently related to op metal.
Ah, the scrap metal smuggling investigation, the one that supposedly cost the government, what, RM 950 million in lost taxes?
Exactly that one. It's a huge figure. Mayu Global is saying there's no material financial impact on them right now, but
But it highlights that ongoing regulatory risk, doesn't it? Especially in that sector. RM 950 million really frames the potential scale.
absolutely. And speaking of governance issues popping up, look at PPB Group.
Right, they put out a warning.
They did. It's about their associate company, Wilmar International. PPB expects Wilmar to report a net loss for the third quarter.
Why is that?
It stems from a massive RM 3.1 billion financial penalty from Indonesia. It relates back to a Graft case from 2021.
Wow, 3.1 billion ringgit. That's a serious hit.
Mm-hmm.
And Wilmar is crucial for PPB's profits, isn't it?
Very much so. Wilmar actually still expects to be profitable for the full year, surprisingly enough.
Really?
Oh.
Despite that penalty?
Yeah, it speaks to their size, I suppose. But for PPB, it's a significant concern. Shows how these regulatory things, even from a few years back, can suddenly bite.
Okay, shifting gears a bit. Vantress Energy, which we used to know as Sapura Energy, they reported results too.
Yes, and unfortunately, a widening net loss for the second quarter came in at RM 230.76 million.
What drove that loss?
Mostly unrealized foreign exchange losses, actually. About RM 239 million worth.
And this comes just after they finished that major restructuring, cutting billions in debt.
Exactly. They slashed debt from nearly RM 11 billion down to RM 5.6 billion. They're really pushing to get out of that PN17 classification.
The category for financially distressed companies.
Right. But this FX loss just shows how much volatility they still face.
Yeah.
Even with less debt, currency swings can still hurt their turnaround plans.
Okay, let's find some positive news. Gamuda seems to be doing well internationally.
Definitely. They just grabbed a 50% controlling stake in a big new project in Singapore, Chenchara Close.
How big are we talking?
It's a mixed-use development valued at about $1.012 billion. That's roughly RM 3.31 billion.
So that confirms their regional expansion strategy is gaining real traction. Good for them.
Yeah, strong momentum there. And another interesting development, Aeon Credit launched a social loan with MUFG Bank.
A social loan, what's the focus?
RM 500 million aimed at financial inclusion, specifically targeting underserved groups, especially people earning RM 2,500 or less per month.
Interesting. So moving beyond just CSR, tapping into a specific market segment.
Precisely. Okay, let's look at policy and sector news. Some relief for consumers.
Yes, good news on electricity bills. Tenaga National announced cheaper tariffs for October.
How much cheaper?
There's a 6.5 cent per kilowatt-hour rebate. It's thanks to falling fuel costs, part of that AFA mechanism they use.
I mean, that's for most users.
Most, yeah. Doesn't apply if you use very little electricity or if you're on the green electricity tariff. But for the majority, it's direct relief.
And they expect this to continue.
Projections suggest these rebates could stick around into early 2026. So some sustained help for household budgets.
That's positive. But on the flip side, major changes coming for the steel industry itself. METI unveiled a roadmap.
Yes, the Steel Industry Roadmap 2035, it's a big one, aiming to tackle overproduction and really push the industry towards low-carbon practices.
What's the real teeth in this plan? How are they enforcing it?
Well, they're prohibiting new licenses for the high-emission BOF type steelmaking plants, the blast furnace, basic oxygen furnace ones.
Ah, the ones with the highest carbon footprint. So no more building those.
Seems like it. They're also tightening licensing rules generally.
Yeah.
And potentially backing it up with a carbon tax.
A carbon tax as early as 2026.
That's what's being explored. The idea is to use the revenue to fund these green transition projects within the industry. It signals a pretty serious and likely expensive shift.
Definitely a major structural change underway there. Okay, let's zoom out globally. What's happening in international markets?
Well, we're seeing some interesting signals. Gold prices have surged.
Oh, how high?
Broken past US $3,800 an ounce. That's a record high.
Wow. What's driving that? Flight to safety?
Seems like it. Bets on U.S. Fed rate cuts playing a role. Plus, ongoing geopolitical worries. Classic safe haven buying.
But hang on, aren't stock markets doing okay?
That's the contradiction.
Okay.
At the same time, Goldman Sachs strategists just turned bullish on global stocks, at least for the short term.
Why is that?
They're pointing to resilient U.S. economic data and believe Fed policy will remain supportive. So, risk-on sentiment in equities still seems alive.
So money flowing into both safety assets like gold and risk assets like stocks reflects a lot of uncertainty, I guess, mixed with some economic hope.
Definitely mixed signals. And finally, a quick look at domestic politics. There was that proposal for simultaneous federal and state elections.
Right, to save costs and align terms.
But civil society groups are pushing back, aren't they?
Yeah, they're rejecting that idea and arguing instead for fixed election dates.
What's the argument for fixed dates?
Proponents say it would bring more governance stability, better economic certainty because businesses would know the schedule, and even help with things like disaster preparedness. They feel those benefits outweigh any minor cost savings from holding polls together.
Makes sense. For investors trying to navigate big policy shifts like that steel roadmap, knowing the political calendar adds a layer of predictability.
Absolutely. Political stability is a key factor in risk assessment.
So wrapping it all up, what's the key takeaway for our listeners today?
I think it's about balancing these significant local developments. The power tariff relief, yes, but also the huge structural changes in steel and the ongoing governance risks with these quite contradictory signals from global markets. You've got gold hitting records while some analysts bet on stocks.
Right. Understanding how local factors like policy shifts and regulatory actions interact with these bigger global trends like commodity volatility and U.S. market outlook is really crucial right now.
Couldn't agree more. Staying informed is key.
And if you want to stay informed with deep dives like this every day, make sure you subscribe to the Malaysia Money Matters podcast. Hey there, thanks for tuning in. If you would like a deeper dive into all the investment opportunities from today's news, subscribe to my newsletter at moneymatters.substack.com. I will be sharing a deeper analysis of the key investment opportunities from today's news, including what makes these opportunities stand out and how they fit into the broader market trends. By subscribing to the Malaysia Money Matters newsletter, you will also get exclusive insights on my watch list and portfolio and fundamental reports on Malaysian listed companies.